Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, this is going to be a beginner's guide for anybody that wants to start swing trading. Whether you're a beginner or maybe you've been swing trading for a couple of years and you're just still having a hard time, becoming profitable. So these are going to be tips and tricks and pretty much how I would go about swing trading. We're going to be talking about pretty much and everything. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe, and if you guys want to learn more about swing trading, check out our school. We have our Black Friday sale going on for 51% off. So make sure you guys use that code. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. We teach you strategies. We teach you how to find stocks. It's not a get-rich-quick scheme. It's not alerts or anything like that. We just teach you honest strategies that I've used for over 6 years to become a full-time swing trader. So I hope you guys all enjoy it, and don't forget code Black Friday for 51% off, and let's jump into this here. So what is swing trading? So swing trading in simple terms is when you buy a position. Now the position you buy, it can be almost anything. Some people will swing trade ETFs. Some people will swing trade Forex. Some people will swing trade cryptocurrency. But it's pretty much when you buy a stock or a position and you hold it for more than a day but less than 1 year. When you buy and sell a stock during the same trading day, that's considered a day trade. It's a different type of trading strategy, a different type of setup, and you have to be very, very, very in tune with the market for day trading because you're getting in and out of that position, within the same trading day. Now, when you buy a stock and you hold it for more than 1 year, that's considered a long-term investment. It's a different approach because you're holding through several earnings reports. You start caring about fundamentals like the revenues, the cash flow, and all that stuff. So on average, my swing trades, they last for about 6 to 9 days. But let's go ahead and read this here. So swing trading is a strategy that focuses on capturing short to medium term price movements or swings in the market. Key features of swing trading is time frame. So trades typically last from 2 days to several weeks. Objective is to profit from smaller, more frequent price movements. Approach kind of combines, technical analysis, so like chart patterns and indicators, and then sometimes with fundamental analysis. So if you're holding for a couple of months, then you will start caring about fundamentals. But honestly, at least for me, I definitely care more on the technical side. So chart patterns, indicators, stuff along those lines here. All right, an example: a stock is trending upward, but does have dips down. So you guys can see this would be a prime example of like a stock that would have some opportunity here. You guys can see that trend line going up, and these sell-offs represent an opportunity to get in on a swing in the market. All right, so getting started. So, one of the first things that I think is very, very important is, it's just setting clear goals, right? How much do you want to start trading with? What are your profit expectations? And this is important because if you're starting out with like $100, don't expect to make like $100 a day. Expect to make, $1 a week with that amount of money. But honestly, if you're starting out, I would highly recommend taking a step back and actually start learning and paper trading. Doing that for like 6 months to a year will definitely really help separate you from other traders. And the reason why is because you can practice strategies. You can figure out what's working, what's not working, but it's important there. The next thing here that I'd recommend doing is choosing the right tool. So you want a reliable broker. I use Moomoo. They're awesome. They offer really good charting and scanners and tools. And at the end of this, the slideshow, we're going to be showing you guys a strategy that I absolutely love with Moomoo. So make sure you guys, stay tuned for that. And if you guys want to sign up, you guys can get up to 20 free stocks by signing up. The next thing here, some people like external charting software. I use Moomoo. I think there's no reason to spend extra money on charting software. And then sometimes some good risk management calculators are important. I do have those in the course, so if you guys want them, you guys can get them there. And then the last thing is just understanding just different market conditions. So you want to identify trending markets for maximum opportunities. and we'll talk about how to do that. So using Moomoo, for those of you that don't know what Moomoo is, so you guys can kind of see here, this is how the charting looks. So it kind of does get a little bit, confusing if you haven't done it before, but Moomoo is a trading broker that offers real-time data, advanced charting tools for technical analysis. They have a community. They have very low fees, so they have no commission. So you're not paying them to buy and sell. The only way you'll pay is for like margin and stuff like that. It's very simple in how to get started. You just open up an account. You can download it on Windows, Mac, or even your mobile phone. And then you can start doing the virtual trading option for practice. You can set up, alerts for key movements. That's what I love to do. So Moomoo is a great broker and honestly probably the best trading broker. So check them out down below because you guys can get up to 20 free stock. All right. The next thing here is swing trading checklist. So having a checklist is very, very, very important. And the reason why is because what this does is it helps you choose stocks that meet your criteria. You don't just buy random companies. When I first started swing trading and trading, I thought you would just buy random stocks. No, you need to have like a pre-trade analysis. So one of the things that I look for is a stock on an upward trend. I love finding a stock on an upward trend that has sold off down to some level of support. So that support line could be a trend line, a moving average line, something along those lines. You also want to confirm this with some key indicators like those moving average lines, like the RSI, maybe even the MACD line. And then you want to have your entry plan. You want to know where you're buying. Are you going to get in on the support on the stock, or are you going to wait for like a possible breakout on like a lower time frame? The next thing is position sizing. I wouldn't risk no more than 1 to 2% of your capital on a given single trade. This is important for preserving your money for risk management. A lot of people think that risk management is all about making money when in reality it's about preserving money. And obviously you need to know your stop loss at a predefined level you want to use, or are you going to use a trailing stop to lock in profits as the price moves in your favor. You want an exit strategy. So are you going to sell at resistance or when your profit target hits? Consider scaling out to secure partial profits. All right. The next thing that I would recommend doing here is keeping a trading journal. Having a trading journal is super important because what this does is it helps you understand what's working with your strategy. So like I said, you're going to want to take a year, to paper trade and learn. So during that year time, you want to journal everything. You want to journal your entry, your exit, your risk management tools. And what this will do is figure out, okay, I bought in here. Maybe I should have waited for this. And you want to review those trades. So benefits of a digital journal is to spot patterns in your trades, identify strengths and weaknesses, measure your progress towards those goals. And you also can include pre-trade details. So for me, I have a digital trading journal that I absolutely love. And I'll actually show you guys it right here. And if you guys want this, I'll put a link to this down below here. So this is our trading journal here, and you guys can see the dashboard. So you guys can see our account balance over time. You can see performance by strategy. So this past month here, our moving average strategy has been the best profit here, with our best profit being Costco stock. So now what I do is I review Costco, what worked, what's working, what's not working, all that good stuff here. So having a digital trading journal is very, very important here. So I'll put a link to that down below so if you guys want it. The next thing here is identifying trade opportunities. Like I said, it's very important to have that checklist, which is often referred to as strategy or an edge. So one of the things that I love is this little checklist is finding a stock on an upward trend, looking for a pullback to a moving average line, like the 90-day moving average line, the 200-day moving average line. Then you want to check for an undervalued RSI, which is the relative strength index. That's another indicator. And then you can look for a breakout on the 1 hourly chart. This right here, I would highly recommend screenshotting this right now. And then now you guys can use this for future trades. So it's a really, really good strategy there. All right, so let's look at some charts. Make sure you guys subscribe. All right, so this is a stock that we actually just recently took a trade on. This is ticker symbol AEM. AEM, as you guys can see, has that very, very, very good upward trend, like I said in my checklist. The next thing that it did is it sold off down in this blue line, which is that 90-day moving average line. You guys can see where it hits it, we had that good curl going in our favor. The next thing that we looked at is the RSI, which was trading for a 28. The last time it was trading for a 28 was back in this range, and look what happened. Great buying pressure. So now as the stock sold off here, one of the things that we want to do is look at a lower time frame. You guys can see this general downward trend. So this is where you wouldn't want to get in on the position. So the stock popped up. The best entry point for this position would have been in there, and the stock rallied its way up. Now, for me, what I did here is with our entry point, we didn't get the greatest entry point at 78.50. So, we didn't buy at those peak bottoms here, but we had this general trend line going in that direction. So what we did is anytime that stock dipped below it, we just took our profit, and that's exactly what we did this morning. Took our profit, moved on to other opportunity in the market. This is a simple checklist that works very, very well, whether you're a beginner or maybe you're a trader that's been trading for a long time and just is looking for more strategies. So I hope you guys all enjoyed this. If you did, hit that like button, subscribe, and don't forget, if you guys want to learn more about trading, code Black Friday for 51% off. So we'll see you guys in there. Hope you guys all enjoyed it. Like, subscribe, and hope you guys have a great rest of your day, and take care.